Welcome to the StockMeter.com studios. I'm your StockMeter Brian Johnson, and I am sitting in a coffee shop in just outside of O'Hare Airport. We were going to leave and realized we were running a little bit early, so we stopped at a Go Figure a mall so that my wife could do some shopping. And I am sitting in a Barnes & Noble. It's huge. It's a two-story Barnes & Noble. There's probably, I don't know, 3 or 4 books in this place. Now, the place is huge, and it's got a Starbucks built into it. So I decided to come and record my videos before we left on our trip while the wife does some shopping at Nordstrom's. Anyway, had a very, very, very good time out here. The game was awesome. What a great game to be at. If you were a Packer fan, that was. If you were a Vikings fan, no, you probably weren't all that pleased with the outcome. But you know what? It was finally nice to beat the Vikings with Brett Favre at the helm. Took us a couple years to do it, but we did it. So it was a blast. Had a really good time. Crowd was great. Fans were fantastic. The game was amazing. I actually got a chance to meet Luke Rogers, which is Aaron Rodgers' brother. So that was extremely exciting. Very cool. They look very, very, very similar. And I had a very, very good talk with him. So, anyway, now we are headed back home. And I realized that I thought we were getting back home about 7 or 8 our time, and as it turns out, we're not leaving until about 7 or 8 our time. So we're going to be in very late. Try to get this video done for you so that you guys have something to watch tonight in preparation of tomorrow's market. Um, More of the same of what we've seen. The Bulls cannot seem to get their feet underneath them. We are very stretched up here, and I talked about this point in the markets right here, where we're very, very, very stretched. Got to be very careful to the upside. The mantra has not changed. It is exactly the same as it was the last week, couple weeks, 3 weeks. And you can see, based on what we saw today, we saw a big run up, little gap up, little run up to start the day, and then a slow bleed out the rest of the day. The Bulls are not interested in necessarily driving this thing higher to any great degree. And the Bears are certainly not interested in dragging this thing down to any great degree. But neither one of them really wants to give up any much more room one way or the other. So in that respect, what we see now are the Bulls are just, as they have been, every day kind of winning the battle, just ever so slightly, winning the battle, winning the battle, winning the battle, and we're back to our slow grind to the upside. You can see what we got today. Another push up into this overhead resistance right here. And then the little fall coming right back into the 20-period moving average. And this little resistance bar we've been watching. All right. So overall, right up to resistance, right back to support. Go fig. But nothing broken from the bull side whatsoever. The daily still looks the same as well. But you can see as it pushes through these upper areas, there is selling pressure meeting it as soon as it gets through. Now, if it can stay up here, you guys know it's bullish. As long as we can roll sideways, if we can keep trying to push through these overhead areas, the market remains bullish, neutral to bullish. But once again, you got to be very, very cautious within your moves. You can't get into large positions. You can't be throwing tons of money at this thing. And you can't be guessing at when you think the drop's going to happen or when you think the bulls are going to drag this thing higher, whatever the case is. Just follow the charts. Let them tell you what to do. Today, the charts were, look, we're breaking above this upper level, but it did not hold. Once again, what was the high? The high was 11,247. What's the high back here? 11,258. I mentioned if it's going to break this overhead level, don't get caught in one of these little wicks where it moves up and then it pulls it right back down again. We've seen it twice. So you got to be very, very cautious within your trading here. NASDAQ has been a monster. Still up today. You can see 9 points, up about 0.5%, but it gaps up. And then it comes right back down the rest of the day. Now right back to about where it started on the gap up. So if you're an intraday trader, extremely difficult trading here. Very hard to play. There is no real movement. There is no real trend. Overall, the trend is up, and you can see we've hit it 1, 2, 3 times here. We got the move over and above it, which was to be expected. But the Bears, once again, pulling it back down, trying to fight its way over this 2125 area and into that 2120 or 2150 area we see here on the daily. Can you see this huge, just a huge run up here by the NASDAQ? This overhead area is sitting right around 2150. The NASDAQ gets any more wheels behind it into the rest of the earnings, and maybe we touch this line. maybe we touch this line. But as for the long side, once again, 2125 to 2150 for me on the NDX is just a no-fly zone. I'd stay out of it, and I'm not interested in shorting the Nasdaq. So if you like to play the Qs, if you like to play the Nasdaq ETFs, and you're not already in a trade, I would just recommend that you sit on your hands and wait for a better time. Look at individual stocks, look at other ETFs, but I'd stay out of the Nasdaq for the time being. From a weekly as well, you can see the climb up. Now we just started, so not much to talk about on a Monday, so we'll ignore that. SPX on a 60-minute here, you can see what's happening. Same thing, dancing with the blue line. We're above it, we're below it. We're above it, we're below it. Here we were below it, now we're above it. Now we're coming back down to test it again and or get below it. Can you see it's just a crazy ride up here? There's a lot of this buying and selling, push and pull by the bulls and the bears right here. If you're getting your hands slapped during the course of a day and you're trading, go figure. Not to be, or not, I should say, this is to be expected in this kind of an environment. It's just the same type of thing. However, overall, look at this. 84, 81, 1185, 1189, 1196. We are still making some highs up here, meaning that the bulls are not quite ready to roll over quite yet. Where does that 1196 fit in? You're going to see as we push forward here. Here you can see us on a daily, and we are up, then back down. This is not the most bullish of candles, but if this thing continues to the side, no reason to think that we can't get a little bit more bull action out of the SPX once again before this is all over, which would then lead us right into QE2 and the elections. That could be where we're headed. Right now, it certainly looks like that might be where they want to go. Breaks back below these areas, as I've been talking about forever, especially below 1165 and ultimately below 1150. Great opportunities at this point now, I think, to get short. From a spec trade, I told you that if you're going to spec trade this thing, you want to take a short right up around this 200. Now, I called that about 1195 last week. It's 1194 this week as it continues to drop. But we hit 1196, so it held. For one day, it held very nicely. And for you intraday traders, this was your trade. Up around that 1194 or 95-ish mark, somewhere around in there, that was your place to get short. And you're able to squeeze a little bit of money out of that on the first touch. Any subsequent touches of this line, though, I'd be very careful of a breakdown on the bear side. This thing could break to the upside. Then we're looking at 1220, next larger overhead area. VIX on a daily, no confirmation here. Look, move up in the VIX, sizable move up in the VIX nonetheless. Move up in the VIX, and the markets were overall up for the day. So, and we've seen this before. So if you're saying, yeah, well, we've seen it before, you're right. What are we looking at, guys? Talk to me here. We're waiting for breaks, okay? We want breaks below this line. We want breaks above this line. Then we'll start talking more about where the VIX is going. Is fear coming into the market? Is fear continuing to blow out of the market? Right now, there is no fear in the market. As long as this stays down in this area, right around the the 18 to 20 area, there's just no investor fear down here at all, and you can see it's being reflected perfectly within the options and the VIX. The VIX is showing no fear at all at this point. And he breaks up and out of this, then okay, now we got something to talk about. But for the time being, nothing to worry about. Apple on a 60-minute here, you can see kind of just got itself up and over this line. I don't know. I could maybe have tweaked this line ever so slightly to contain all of this price action. Point is, it's not going anywhere. We did not get a push above 315, and we did not get a push below 305, 300, or 295, which were my calls here. Still stuck within this channel. We want to be very careful with our trading up here in Apple. There is something, though, that, I would be a little bit more bullish on. It's always Apple. It's fundamentally strong. Very fundamentally strong. It's going to be in for a pullback, though, just like everything else. It can't go up forever. It will be in for a pullback. I would not be the one that would want to try to guess at when that's going to happen. So until we break 300 and ultimately 295, not too worried about a short position in Apple for the time being. It's just such a monster. Look at this, many weeks up in a row, pushing up into this area here. Still like it above 320 and below 300. FAS on a 60-minute stayed sideways today. We saw the gap up, run right back down into a consolidation, staying in between all of these support resistance areas here from a daily perspective. Very simple. There we go. There we go. You can see staying within the symmetrical triangle up here. Now, where the symmetrical triangle is, I still remain more neutral to bullish on this, no question about it. Going to have to be breaks below this down here for me to start to get more bearish on the FAS. This would also make for a pretty decent short trade, I think, if we can get below about 21. Otherwise, back above 23.50, probably your chance to start looking at a long position. From FAZ on a 60-minute, you can see it's kind of trapped still down here in this area. We saw the big gap down followed by the huge run up, only to see it pull back. Moving sideways here. Your breaks above 1260, 1270, and then above again $13. I really like that push above 13 a little bit more. Let me take a look at where the dailies are, and you can see above that 1270 area to get above the 20-day moving average, and ultimately above 13, because that gets us up and out of this little wedge type formation we're forming. As ugly as it is still a wedge. So breaks to the downside negate any wedge formation at this point. But if it gets above 13, that could be a really good place to go ahead and get long. So above 13, below 12. Financials were one of only 2 sectors that were down today. Everything else was up. So the bank's still trying to find their footing here. If the markets can stay bullish and can stay sideways, and the banks can finally find their footing, we could see a pretty sizable push up in the markets. I think that would carry us up into that 1220-ish range on the SPX. Taking those intraday trades, great, have at it. But now you can see why we need to be cautious. We're getting a lot of wicks to the upside. We're getting a lot of selling pressure to the upside. A lot of people are looking to be very cautious up in this area. So for the next week and even 2 into the elections, unless we break some of those major levels, I'd tell you to just keep your money in hand, be cautious, play the market for what it's going to give you, and don't get too ahead of yourself. That's a good way to lose money. All right, guys, I will be back full-time again with you tomorrow from the comforts of my own computer. Until then, take care, and we'll see you again tomorrow night. Bye.